I was blessed to spend 7 years teaching at Purdue University, the capstone course for financial planning, where I broke down this $240 textbook that was full of outdated information, not because the author was wrong, but because things had changed. I broke it into 5 categories, 5 areas where, in my opinion, if you get one of them wrong, the other 4 jeopardize your financial future. We're going to break them down for you on Consider This Program today. Well, good morning and welcome back to Consider This Program. I'm your host, Joe Clark.
I'm Grant Soliven.
Happy to have you along. Hey, you know what? James Clear in Atomic Habits said that success is never dependent upon one thing, but failure can be. So let's think about that for a second. You know, I do my best to eat right. I do my best to work out correctly. I do my best to get enough sleep. I'm doing better at that than I have in a long time, right? You know, there are these things that I do for my physical side of my body where I'm trying to take care of it, trying to do the right thing. But it doesn't matter if I eat right, if I'm not sleeping at all, if I'm not hydrating at all, eventually I will perish, right? It's just the way that it works. So you've got to do all of these things together. So when I went to Purdue University, to teach financial planning, and God has a sense of humor. I've had people ask, how in the world did somebody from IU wind up teaching at Purdue? Well, it's real simple. A professor heard me on the radio. Purdue promoted a professor that nobody liked, and so the other certified financial planners quit. And all of a sudden, I get this email out of the blue that said they'd like me to come teach for a semester. And I thought it was kind of hilarious that an IU guy had to teach Purdue seniors. And next thing you know, they say, will you stay for another semester? And then at the end of 3 years, they said, you know, you've got to go back and get more education if you're going to continue to be a professor. And I said, well, you know, I'm sorry, I'm running a company. And a week later, they called and said, we're going to make you a professor. And so I was there for 7 years. Grant is one of the offspring, if you will, that came from that. Taylor is our senior paraplanner down in Florida. Chris Bahena is in our Lafayette office. Jamie's in our Lafayette office. And Andrew is our chartered market technician. I think that makes up the 5 of the 38 of you that came from there. Mm-hmm. Truly an absolute blessing in terms of what's there. But I looked at the textbook and I said, listen, you cannot write a textbook. I'm writing a book right now. It's called Retirement Runway. Should be out first of the year. You cannot write a textbook about what's going on in financial planning because the tax code changes too much. And there was not one of those 14 semesters in those 7 years where I did not have to correct myself because something was wrong. But what I did for Grant, what I did for the other people that were there, is I broke this down into a series of steps that I'm going to let Grant describe in a second. But it is important and imperative, right? Imperative's a strong word. I get it. But as James Clear said, success is never dependent upon one thing, but failure can be. I'm telling you, ladies and gentlemen, if you miss one of these, you can have that failure. So, Grant, go ahead and lay out the 5 critical elements and what they mean.
Absolutely. And just as a side note, of the 5 children born from that program, I am the biggest by a long shot.
Yes, you are.
Probably the hardest to feed, too. Now, with that being said, kind of looking at the 5 critical elements, I remember the day Joe walked in the board in class, over a decade ago now, and wrote this on the board, and it still resonates true today. So if we were to go through the 5 critical elements in their entirety, the first one is your life after work. There's a reason we don't call it retirement. Retirement, by definition, means you're done, you're dead, you're not functioning any longer. And no, when a lot of our families turn in the keys when they are done from the workforce, they don't watch grass grow. In some cases, many of them are busier than they've ever been. And so your life after work is important. So what are you doing? Right? Some people love to travel. Some people are spoiling grandkids. Others are on boards for philanthropical movements. I mean, they're just people are engaged. You didn't retire. You moved on from your working career into a different one. And so it's so important to understand in there, when we talk about leaving the workforce, probably the most important piece of your life after work would be standard of living. Understanding the phase of finance you're in. And understanding your standard of living, which is broken down into 2 pieces. 1, fixed expenses. 2, social. You'll never hear any of the advisors on this team or Joe talk about replacing your income. we're replacing 100% of your standard of living. The second piece, tax plan, annual tax planning. If you're not looking at 1040, you're leaving money on the table. I'm going to leave it at that. You have to review your taxes on an annual basis. It's probably one of the most important pieces of the 5 critical elements. The third is the investment playbook. Right? What are we doing? What's your right risk? What's the risk tolerance? What are we going after? What type of offense and defense are we playing inside of the portfolio? Is it working? Is it matching the objectives you want to achieve? The fourth one, and the one that we hope you never have to live through, but inevitably being human is part of the experience, is we call it risk management and life happens. Essentially, it's the good, bad, and ugly of life. You've heard Joe talk about this many times. In this category, Joe has made it his mission to ensure that you have checklists on certain events that we hope you only have to live through once. Now, our team, I'm going to use a weird word for this, but our team has been blessed to help families through many of these situations many times. For example, losing a spouse. We just got a call last week. A beautiful spouse lost her husband after many years of great marriage, and we're walking through this another season, another instance of this. Losing a job, losing a child. I mean, there's all kinds of things that we want to make sure you have checklists prepared for. What happens now that you're retired and we need to do tax planning? We want to make sure you have checklists available to you to help you walk through some of these hardest moments. And the last piece is legacy planning. And Joe has really taken on a mission in this area. I think there's attorneys, there's judges, there's doctors, there's individuals who have told us to our face this is going to be the number one risk area for families in their future. But no one wants to address it, and that's incremental incapacitation. And as long as Joe's left standing in this industry, this is what he's tackling. And legacy planning is this. How do you leave money behind to your heirs? But more importantly, who takes care of you when you start becoming one sandwich short of a picnic? And so when you couple all 5 of these areas together around your financial vision, this is what the planning team focuses on and manages every single year with our families.
Well done, buddy. I'm just going to, I guess just because I left a meeting this morning where we did a family update, and we buried his 25-year-old son last year. Mm-hmm. And, risk management in life happens isn't always negative, but it is almost always emotional. Whether it's a wedding or a graduation or buying a first home, or do I lease a car or buy a car, or do I put mom and dad in a facility, right? There are things that are not likely for you today, but probable for you over your financial journey. And we all have to acknowledge that. And so that's why we build the checklist. One of my favorite books, it's mandatory reading, in my opinion, is Checklist Manifesto. When I learned that Solé landed the plane in the Hudson off a checklist, it's kind of like, what? What do you mean he landed the plane off a checklist? And he did. And when airlines merge, the biggest fight is over whose checklist gets used. So I'm pretty critical over those checklists and how they work. But it's, why do I want you to try to learn something during an emotional moment that I've already had to think about 10 times? And I'm perma beta, which means I always change. As the tax code changes, as economics change, as conditions change, we adjust the checklist. But you don't have to stop to think about who your trustee ought to be. We've been there. We've done that. We have that T-shirt and have done that work. And, Grant whipped out that word, incremental incapacitation. I know it's hard to say, but here's the deal. My trust used to say, and most of yours still do say, that if a doctor declares you incapacitated, mentally or physically, or if a judge declares you incompetent, that your successor trustees step up. I'm telling you, I've done this for 35 years, and I've never seen it happen. I've watched, and never's a long time, I've watched people when they were physically incapacitated in a coma from a car wreck, semi actually. I've watched them where a doctor has signed off. I have watched people when they're put into mental centers, dementia areas, brain reclaim, I've watched the doctor sign off then. But our chief operating officer is a medical doctor. And he says, Joe, I've never signed one of those in my entire life. Why do I want to be in court for 2 weeks? Right? And it's a nuclear option, ladies and gentlemen. Right? So today I can decide to have dinner with Grant. I can decide to go see my friends tonight at some place here in Anderson that I haven't seen for over a year and a half thanks to COVID. Right? I can make all of these decisions, and then all of a sudden somebody takes me in front of a judge or in front of a doctor, and now I can make no decisions. Houston, we have a problem. Right? Nobody wants to pull that plug. And folks, I've watched millions of dollars go out the door, not because nannies stole the money, not because kids stole the money. I've watched it go out the door because we fade away, and couples tend to fade away together, right? It doesn't matter how old Joe gets. I'm probably going to know more about money than my wife. Right? I'm probably going to know more about money than my kids. So which of the three of them, my wife or my two daughters, which of them is going to be able to look at me and go, here's a good idea, Dad. We're going to take you in front of the doc. We're going to take you to court. We're going to decide that you no longer have the capacity to do this. If somebody doesn't solve this problem, I could end up wasting 35 years of my life. More importantly, you could end up screwing up your financial journey, and that's not what this is all about. We want to take care of you. We want to take care of the legacy. I think I've got a solution. It's going to take work. It's going to take energy. But if you're ready to sit down and talk, go to yourlifeafterwork.com. We can talk about how Financial Enhancement Group can be a successor trustee for you, what that means for you and your family, and how we're able to bring that life issues and the fiduciary issues together. 800-928-4001, yourlifeafterwork.com.